First stock which we'll talk is Astral. There was a drop of around 5% in its share price, and if we look at its technicals, we could see that company has broken down its increasing trend line. The stock reached a peak of around 2300, but then it came down from there. The reason for rise in stock price in recent few weeks was because of its expectations from Q4. However, company delivered poor results, and that is the reason why we could see stock is going down. There was a drop in net profit by 10%, and that is something which spooked investors, and hence we can see the correction in stock price. The reason also is because of its high PE. Companies trading at a PE in excess of 100. With high PE companies, expectations are also high. We can see high PE companies like Titan, like DMart. However, these companies have also shown decent profit and sales growth, but when it comes to Astral, since the growth has dropped, it is quite natural to see correction in its stock price. So we need to be cognizant of this fact. Asian Paints also used to trade at a very high multiple, but while its current PE is low than its long-term average, the reason being entry of Grasim. So there is always a risk of competition, and high PE stock are not having the factor of safety as is available in low PE companies. But looking at the fundamentals, company is good. It has shown good profit and sales growth in last few years, and if stock comes down to a level of around 1750, then investors can look into making an entry into this stock. Another stock from pipe sector whose stock price was down was Hariom Pipes. Company is currently trading at a price of around 570. It has a support of around 550, and like Astral, Hariom Pipe also showed poor result in terms of net profit. They also dropped by 3%. However, the good or comforting thing about Hariom Pipe, unlike Astral, is its valuation. So company is currently trading at a PE of 29, which is pretty low compared to other players. The company is small, is having a market cap of just around 1600 crores, but still the company is showing good sales growth and profit growth in last few years, though current quarter results are not so great when it comes to net profit. However, there is a reason to a drop in net profit when it comes to Hariom Pipe, and the reason is its high interest cost. With small companies, they do need capital to do expansion and other things, and in case of Hariom Pipe, they require to spend high interest costs in this quarter, which has led to a drop in margin, and hence net profit was dropped in this quarter. But as company grows, if it continues to show good performance in terms of sales, then after a while company should be able to pay back its debt. Debt to equity ratio will drop, and then we can expect to have margin expansion, and at that time profit growth will be higher than sales growth. So this company is also looking promising. Fundamentally it's strong, and technical wise also company is near its support, so it can definitely be in our radar. Next company which we'll talk about is Ethos. The stock price of Ethos also dropped by around 5%. If we look at its technicals, then company is taking support of its increasing trend line. Current stock price is around 2340, and it is nearby of its increasing trend line support. It had made a top of around 3000 and then it came down. Company did show a good performance in its quarterly results. Both sales and profit were up, and in fact profit were up by around 58%. However, still the drop in share price can be attributed to one of the research reports. Though in the research report it is mentioned that the stock price is likely to go up, but sometimes it happens that those who write these research reports are the ones who want to make a sale of a particular stock. Hence, idea is to publish such reports and create buyers. But looking at company's growth, it has shown a good profit and sales growth for last 5 and 3 years, and company operates in luxury watch segment. In the recent past, we have observed that company which operates in luxury segment have not been impacted because of inflation. Companies like Titan, Ethos, these are the companies which cater to the segment which is not that much impacted because of all these external factors, and hence these type of companies should definitely be in our watch list. Next company is Pyramid Technoplast. Company's current stock price is around 148. It also has a support of around 145. The reason for drop of company's stock price today can be attributed to its quarterly results, which are scheduled to be declared tomorrow. Insiders may have gotten the info that results may not be good, and that may be the reason for drop in share price. Talking about the company is a manufacturer of HDPE plastic containers, IBC containers, drums, barrels and cans in India. And looking at its past performance, it has provided sales growth of around 23% in last 3 years and profit growth of around 79%. However, profit growth has tapered slightly in last few quarters, and that is the reason why we see that there has been a drop in share price. Its current PE of around 18 is also less than its long-term average, but company is at its support. If it goes up and reaches its all-time high, then it provides a potential gain of around 50%. So this stock also can be in our radar. If when profit turns up, then we could see such companies getting doubled within a month. So we can surely have these type of companies in our watch list.